Hey everyone, Couch Investor back with another video for you today. So in today's video, I'm going to raise some points to why I believe Fiverr is a must-have in your portfolio. The reason you clicked on this video is because I've put the $1,000 price tag, because yes, I believe this stock could 5x in the next coming years. No, not in the next 1 or 2 years, but we're all long-term investors here. So if you can hold this stock for, let's say, 5 to 10 years, I believe this stock will be much further than it is today. So I'm going to raise a couple of points. We're going to discuss all of that in this video. But before I do so, I just want to thank everyone that has been subscribing lately. And if you haven't subscribed to this channel, maybe hit that subscribe button. And if you like these videos, leave it an early thumbs up, as it really helps me out grow the channel and get my videos out there. I would also like to thank today's sponsor, the Motley Fool. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me find the latest growth stock and innovative company. And right now I have a discount for one of my favorite services, the Fool offers. Through the Motley Fool's stock advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock advisors' average stock picks have returned over 500%. If growing your money is something you'd like to do more this year, you can visit www.fool.com/couchinvestor or click on the link below for access to my special offer and decide if Stock Advisor is right for you. Now let's get on with this video. Right, so for those of you that don't know what Fiverr is, Fiverr basically allows freelancers to offer their services on their platform, whether you're a designer, programmer, voice actor, or just someone with a particular set of skills. You can offer those services on the platform. Before, instead, you had to go through an agency. People had to find you through LinkedIn if somebody still uses that useless platform. Now you just go on Fiverr, you look for something specific, and you can contact the freelancer. So for example, me, I was looking for someone to design a logo for this channel. So the potato on the couch was made on Fiverr. The animation at the beginning of each video is also made on Fiverr. Now at the start, Fiverr was obviously a platform where you just paid $5. That's why it's called Fiverr. But right now it has evolved in a much bigger platform. You can still find gigs that cost $5, but there are other freelancers that offer professional services for $1,000 or even more. And that's obviously the whole point, and that's why revenue and this company has been growing year over year. Now Fiverr's management estimate that this market, this freelance market, is worth $100 billion each and every year. So you will see when we go over the financials that this company is still very, very small compared to the total addressable market that they envision. Now, obviously, Fiverr got a huge push thanks to the pandemic. Lots of companies started working from home. Lots of people started to offer their services because maybe they lost their job, etc. Lots of people think that, oh, those working from home companies are probably not going to fare well after the pandemic is over. But I'm just going to show you first the Q4 results, and then we're going to circle back to this point. So I'm quickly going to go over their Q4 earnings report and outlook for this year. So we can see here that Q4 2020 revenue grew 89% year over year, obviously accelerated thanks to the pandemic. Fiscal year 2020 grew 77% year over year to $189.5 million. Huge gross margins of 82.6% GAAP. Non-GAAP 83.9%, GAAP net loss negative $8.1 million and $14.8 million for full year 2020. Now looking forward to Q1 2021 and fiscal year 2021, you can see that growth is still accelerating, 84 to 90% year over year growth. They are estimating that. And for the full year 2021, they are still estimated 46 to 50% year over year growth. So yes, even after the pandemic, they expect to continue to grow aggressively. There's still a long way to go to that total addressable market of $100 billion each and every year. But that's where the great opportunity comes in. And that's why this is great for long-term investors. Now taking a quick look at this picture right here, where we compare Fiverr to, let's say, Upwork, for an example, you can see the huge difference between both companies' sales growth. We can see that Fiverr is at over 100%. This was taken obviously at the end of January, but this still stands, and Upwork is just short of 40%. So yes, Upwork is a competitor to Fiverr. I'm sure a lot of people will ask, isn't Upwork better than Fiverr? Because the company is probably cheaper in valuation, but that's why you pay a higher valuation for Fiverr, because they're growing much faster than Upwork. But even with all that growth, Fiverr is still just a company, I think, just short of $8 billion in market cap. They still intend to grow aggressively internationally. That's one of their major goals, I think, for this year and for next year, to grow internationally, especially in Europe. They're starting to advertise in countries like France and Germany, and they're already seeing some good results from that, so that's great. Now, Fiverr also acquired another company back in February called Working Not Working, a talent platform which sources freelance creatives for the likes of Google, Netflix, Spotify, Droga5, and Wyden plus Kennedy. And important to know that Working Not Working will continue to operate as a standalone entity under the leadership of Gignac and Tompkins, their co-founders. To me, it's pretty clear the world is moving towards digital. Yes, the pandemic might have accelerated that move by a couple of years, and that's why you see companies report growth of 80%, 90%, 70% year over year. And that's normal. It's super normal to see that growth maybe decelerate in the next year or two, and that's fine. But as long as that growth and the company keeps growing at 40, 50% year over year, that's fine by me. And that's why you pay those high premiums right now. You want to buy a company like IBM that hasn't done anything for the last 5 years? Or would you like to buy a company like Fiverr who has been growing and is projected to grow 50, 60% in the next coming years? I also believe that working from home will not just disappear. I do believe companies will adopt working from home or work from anywhere around the world. I also do believe that more companies might be using freelancers. More people that might have lost their jobs might be working as freelancers right now and might continue to do so moving forward. And that's how companies like Fiverr, Upwork, and yes, even Wix or LinkedIn, Microsoft might take advantage of that. Again, total addressable market, it's pretty big. Fiverr is still very small. That's why I put a big price target, but don't let it fool you. I don't expect Fiverr to be worth $1,000 next year. I expect them to be worth way more in the next 5 to 10 years. Now let me know down in the comments below what you think about Fiverr, what you think about Upwork or all this gig economy. Let me know down in the comments below. And that will be it for this video. If you liked it, consider leaving a thumbs up. And if you haven't subscribed to this channel, hit that subscribe button. And as always guys, take care, stay safe, and see you all in the next video. Bye bye.